All right, when it comes to investing, be careful of bad advice that's floating around. Brent Wilsey, CEO and president of Wilsey Asset Management, joins us to clear up some bad investment sayings. Brent, good morning.
Good morning. Good to be here.
It's important how you talk to yourself, right?
It really is, and other things you say to people to justify the bad things that you do. I mean, the average investor gets about probably 2 to 3% on their total portfolio. They'll have like good spots and so forth, but overall they'll get only 2 to 3% because of these bad things that they say. And in our firm, Wilsey Asset Management, we talk about no emotions, just results, and this is what I'm talking about. And these are sayings that people hear to justify bad decisions.
Okay, so let's go right down the list. You got 8 of them. Number 1, it can't go any lower.
That's what they say, and they say now is the time to buy. And you got to ask questions when you invest. Why can't it go any lower? It could go lower, but you've seen it maybe at 10, now it's at 2. Oh, it can't go any lower. Well, it could go lower, so don't justify your buying just because you think it can't go any lower.
Conversely, it can't go any higher.
Exactly, and people think, well, I got to sell this because it just can't go any higher. Again, ask the question, why not? What are the earnings? What's the news coming up? Don't base an investment decision just on the stock price. I tell people, it's like looking at the speedometer on your car. You're doing 80 miles an hour. You have no idea what's going on around you. Look what's going on around you, not just the speedometer, the speed you're going, or the stock price itself.
Okay, here's another one. It always comes back.
Yeah, I love that one. People look at a short-term time frame. Could be 3, 4 years. Like every single time it goes down, it always comes back. That stock could have been around for 20, 30, 40 years. Don't base a decision that it always comes back because it goes down on a short-term time frame. Look again at the fundamentals, because maybe this time something's different. Maybe they took on a ton of debt. Maybe they got a lawsuit against them. Don't base it saying it always comes back, because it may not that time you buy it.
Oh, okay. How much can I lose? It's only $3.
Oh, I love this one, because the stock could have been 30, now it's at 3. How much can I lose? It went from 30 down to 3. That's $27 difference there. Well, you think about this. You buy it at 3. It goes to $1.50. You lost 50% of your money. So you can lose more. Don't again base it on a stock price. Look at the fundamentals that makes up that stock price.
Okay, this is a good one. When the stock gets back to what I paid for it, I'll sell.
I love this one. People get so adamant, like, I'm not going to sell. I paid 20 for it. It's at 15. When it goes back to 20, I'll sell it. The stock does not know what you paid for it. The company, the stock market, no one knows what you paid for it. Don't base your decision on a bad decision maybe you did buying the stock. Base it on what the current situation is now. The stock may only be worth 10 or 15. Don't wait to go back to 20 just because that's what you paid for it. Sell it, buy something else that will go up for you. Okay.
I own conservative stocks, never beneficiaries as well. What does that mean?
That means never sell. And I've seen, well, I've had this stock forever. I'm not going to sell. It's a conservative stock. It's not going to go down. And again, we've got companies like GE that went bankrupt, not bankrupt, but went way down from 40 down to about 5. We've had General Motors go bankrupt, Toys R Us go bankrupt. So people think just because it's a conservative stock, they never want to look at it and say, oh, it's fine. And the one that says never, people say this on their deathbed, never sell that stock, has done very well for me. Well, that's a whole different time frame. You could have new CEOs, new CFOs, new products the company came out with. So never, ever say never sell anything, because things can change. And I know that people feel bad. Well, my dad held the stock for 20 years. I can't sell it. Different scenario, maybe you should sell it.
And this one is to the counterintuitive nature of investing. The stock went up, so it must be the right time to buy.
Yeah, because you've made money on the stock, you feel like, yes, I know what I'm doing. This is good. I've made 20, 30, 40, 50%. It's gone up, so I'm going to buy more to make more money. Well, stocks are based on valuations. When you bought that stock, it may have been a great time to buy it because maybe it's trading at maybe only 10 times earnings, and that's why you buy a stock based on the earnings. Well, now it could be at 20 times earnings. It's more expensive. So it's like you have something on sale at the store. You might buy it on sale. You don't go back and buy more of that same product because it went up in price. No, you wait for it to go on sale again. So never base it on just because you made money, good decision to buy more. No, you could be buying high, and then you'd have to sell low.
Yeah, you want to buy on bad news, right?
Exactly.
Lord Rothschild said you buy when there's blood in the streets.
Exactly. I mean, whenever there's a sale in the grocery store, the retail stores, people want to go in and buy on the sale. When you invest with stocks or mutual funds or whatever, people do the opposite. When things go on sale, they want to sell. When things go way up in price, oh, I'm going to buy, I want to get in because I'm going to miss something. And that's not the case.
Right. Okay, here's the last one. Look at all the money I lost because I didn't buy.
Yeah, I love this one there. And then they justify it, well, had I bought before at 10, now it's at 20, I've lost all this money. So I'll buy now so I don't miss the next leg up. Again, it comes back to what is that equity worth? It may have been great at 10, now at 20. Don't think just because you lost money by not buying, now's a great time to buy. No, maybe it's time to buy something else, not that one that's gone up already.
All right, good advice. Brent Wilsey, Wilsey Asset Management. Are you doing summertime seminars at all?
No, we got a lot of things going on, but we got a lot of compliments on our newsletter that we do. People love that newsletter. It's free, comes out every Friday. They can get it at our website, smartinvesting2000.com. Again, smartinvesting2000.com. People love that newsletter. So it's quick and easy to read, but a lot of information packed in there for people.
Good stuff. All right, thanks, Brent.
You're welcome.